many sights to see.
Hello, traders. Gary Wagner here. Approximately 10 after 8 in Honolulu, Hawaii. It is Monday, the 11th day of July, and this is the Daily Report. We do have gold trading higher this morning. However, it's trading after coming off of a substantial move in the market. As you can see here, we will look to start with a 3-minute chart. And this is just a simple line chart, currently trading at 1548.90, so call it 1548, 1549. It did have a high of 1556 last night in trading, but on the back of an incredibly powerful dollar, we saw the market move down strongly in the morning session as New York opened. Traders, this report is coming on the heels of a buy signal that we issued this morning by a separate email. We timestamped that at roughly 1547.30, so you're in roughly in that area. Today, I published my latest commentary with Kitco.com, and in there were a couple of factors that I talked about for the reason that I truly believe we've run back into a full-blown bull cycle. And we have been looking at this, of course. The first thing is when we look at our weekly chart here, we spoke about the fact that the market seriously violated it and broke through that as this market was correcting a few weeks back. The opposite is happening right now. We have a market that is testing, has traded above, and is currently trading just at that significant point. Now, the market had a tremendous move to the upside in the evening session. It was up about $11. A incredibly strong U.S. dollar took back about $21 out of the $23 gains to put it up only a couple of dollars. That pushed the market back down roughly to 1541, and we have seen it steadily climbing since then. The fundamentals that are driving this market simply have not changed. You know, gold right now is at a 2-week high. You have the continuing concerns over the European debt crisis. You have right now a bailout fund which may have to be doubled to, I believe, 1.5 trillion euros to cover a crisis now in Italy. China's inflation climbed to a 3-year high, and inflation will continue to be a problem globally, and that's according to the analyst over at Bohai Futures Company, and that's Chai Dofeng. Now, what I did today was I put together some new projections. These are simply based on Fibonacci extensions and Fibonacci harmonics within the extensions. Now, I have 2 extension sequences. The first one's very, very shallow. It covers simply wave 1. The second one is much, much deeper, and it goes from 1308 all the way to the record top. So the low and the high as we have seen it this year. I started the extensions from this low, meaning after the market traded down to the area of roughly 1475. Now, the interesting thing is when we look at a 100% move, and a 100% move is simply saying that wave 5 will be about equal to wave 1, that will take us to 1614 right in here. At the same time, when we look at a 50% extension, in other words, half of this move right in here, we get a harmonics because you notice that that is 1609 at 50%. Because these 2 extensions with different time scales have a very similar number, it seems very plausible that this could be a likely area, and the other harmonic that we get is up around the 1641 to 1647, quite a ways away. So as I say, the target right now that I believe we have the ability to see within the market is over 1600, and it's definitely a new high in terms of the record high. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange